Hey everybody, my name is Matthew Sambanis. I'm a certified public accountant. My firm is based in Long Island, New York. Today is July 17th, and thank you in advance for watching this video. If you're into economics, finance, and making money, please be sure to like, comment, and subscribe. It means the world to me, and I think a few people short of 1,000 subscribers. So if you would please click the subscribe button, that would mean the world to me. Anyway, today's video, we are going to discuss why the Federal Reserve lowering interest rates could result, or probably will result, in an explosion in inflation. As a matter of fact, I believe inflation is going to explode whether they raise rates, don't raise rates, or do. And the reason is, well, A, by lowering rates, that's going to definitely stimulate inflation. That's just common sense 101. And even if they raise rates, they're not going to raise rates enough to have any real economic effect to really combat inflation. And, last week the Federal Reserve met. Powell indicated that they would not wait until inflation is down to 2% before cutting rates. He referenced the idea that central bank policy works with long and variable lags, and that's important to harp on, but we're going to go into it. And the other thing I'd like to point out is that, inflation was caused by the printing of the money supply and low interest rates. And the cure to inflation has been higher interest rates, right? And it's still there. Inflation is still here because interest rates are still too low, even though they're much higher than they have been for the last 20 years. They're still low historically. By the way, I speak freely. I just, reference a few articles here and there, but otherwise I speak freely on the topic. So if I stutter or stammer, I apologize in advance. So anyway, basically Powell said he's going to not wait until inflation gets down to 2%. And of course, that negates the fact that he said inflation was supposed to average 2%. So, in the last few years, inflation has gone up probably 100%. I'd say we've had hyperinflation on a bunch of products. I'm going to go through some of those products, but, then we should have substantial deflation. And, what do you want? Do you prefer inflation or deflation? And if you would please let me know in the comments below, I know I prefer deflation. And the reason I prefer deflation is it's like this. Do I want to pay $500 for a TV or do I want to pay $400 for a TV? Exactly. So deflation, lower prices. Inflation, higher prices. Why in the world would we want to average higher prices? And economic growth is found through capitalism, cutting costs, saving money, frugality, making a better product, more efficiency, etc., not through just raising rates. And so profits can go up without, again, cutting costs, raising rates, finding a cheaper product, whatever the case may be. But again, as to why you would want to tell a country that they want higher inflation, so they're spending more of their earned income, which has definitely not gone up as much as of inflation, is frankly a smack in the face and morally and ethically and frankly should be legally wrong, but of course it's not going to be. Anyway, the monthly inflation rate dipped in June for the first time in more than 4 years. Right? This is from CNBC, by the way. And CNBC is just what a joke. Anyway, they go on to say providing further cover for the Federal Reserve to start lowering interest rates later this year. So in 48 months, and by the way, Supercore actually rose about 5%. So we're going to go through the numbers more, but realistically, inflation was closer to 3% instead of 2%, which is 50% over. If I missed it, think about it. If I'm supposed to get 100 on a test and I get a 50, I've failed. So they're coming in at 3% inflation, and instead they want 2% to average it, or to go down to it now. It's not average it anymore. They changed that tune or that story. But basically, 48 months. So listen, if I gained weight for 48 months in a row, right, and then 1 month out of 48 months, I lose weight, is that a fluke? Or am I going to continue to lose weight? Listen, at best, that's a pure crapshoot, and I would not want to take a gamble on it. I'd say maybe after 3, 4, 5, 6, 7 months of losing weight, I'd say, okay, I'm on a positive trajectory. I'm losing weight. Things are getting better. I'm feeling better and all that. to lower interest rates now when they still even haven't hit 2%, which is the goal. And again, the goal is absolutely wrong and stupid. That, they're using that as a benchmark is completely insane to me. And, clearly the Federal Reserve is not familiar with history. Basically, in my opinion, there's no reasonable reason to cut rates anytime soon. And if anything, they should be much higher than they are. We're going to go through that. But basically, here's an article that goes on. The additional long-term problem: if the Fed really does embark on a new rate-cutting policy to forestall statistical recession, what are the risks? All right, going back to the 1970s when we had hyperinflation, we saw this precise scenario in the 1970s. Twice the Fed concluded that it had beat back inflation with rate increases. Twice its rate cuts ended up setting off another round of inflation. The Fed back then mistook a short-term trend for long-term victory and ended with hyperinflation it could not control. So let's think about this trend, drawing it out. It's just done this. 4 years, it's gone up, and now it just goes down a slight bit, 0.1%. It goes down 0.1% or 0.01%. How can you take any confidence in that? You can't. So, listen, in my opinion, inflation is going to continue to get worse regardless of they lower the interest rates by 0.25 or they don't, but there's other stuff that goes into it. So anyway, this was the first time since May 2020 that the monthly rate showed a decrease. A 3.8% slide in gasoline prices held back inflation for the month. Historically, gasoline goes down this time of the year, so you can't really go off of that. But housing-related costs have been one of the most stubborn components of inflation and make up about 1/3 of the weight in the CPI. So a pullback in a rate of increase is another positive sign, so it's actually not. But again, shelter is the largest component of, quote, CPI, and that's still stubbornly high. I think it was 5-6% through the roof. And, most people, their paychecks, a quarter or to a half of their paycheck after taxes goes to their house or to their rent. I mean, you're not left with a lot of money after that either. What else? Used vehicle prices decreased 1.5% on the month and were down 10.1% from a year ago. Again, we want deflation. Do you want to spend $50,000 on a used car or do you want to spend $40,000, right? Common sense. You want to spend less. Anyway, the Fed officials at their June meeting indicated the likelihood of 1/4 percentage point decrease this year. Markets are now pricing in an initial cut in September, followed by at least one by the end of the year, according to CME Group's FedWatch traffic of futures contracts. Moreover, traders were even pricing in about a 40% probability of a third cut by December. So, again, if you do 3 rate cuts, yes, I guess you might want that if you're looking to buy a new house. But the short-term overnight lending, which is what the Federal Reserve rates are, do not affect the mortgage rates. And if anything, they could actually spike higher based on the yield curve. And if interest rates go down, then we're back to supply and demand, that people now have more money to go bid up those houses and pay more for them. I'm on Long Island. I bought my house in 2017 for about $400,000. It's now worth about $900,000. And, that's more than, 100% increase. It's more than doubling. I mean, over a 7-year period, what is that? 15-17% average increase in prices. And again, I'm an island. It's, subjective and all that, but prices have absolutely blown up. You have people who live in own houses in very, what's the right word, impoverished neighborhoods, and they're now almost millionaires because their houses have just gone up in value so much. The problem with that is, unless you make a lot of money, you can't really tap into it, into the equity. And why would you want to? If you have a rate locked in at 3.5%, my rate is 2.5%, I'm not going to go and refinance, nor do I need to, thankfully, and get a new loan at 7, 8, 9, 10%. So, anyway, the financial press has trumpeted the great news for consumers from last week from the inflation rates that there needs to be some context here. Right, there's a minor blip. It's heavily influenced by what it excludes, not to mention adjustments we cannot see and easily reversed. They also tend to, they have what's called substitution, right? And so if the price of steak has gone up a lot, let's say the price of steak doubled, so now people buy more chicken, then they just use the average increase in the price of chicken, which only went up by 10% as opposed to the steak, which doubled. So these numbers are rigged. They don't show the real numbers. And the other issue is the producer price index, which the government really doesn't, I don't want to say manipulate, but nobody really pays much attention to it either. But it shows, a way worse case in scenario of reacceleration, meaning prices are actually going up, going off of the producer price index. Anyway, Wall Street is booming in ways that fundamentals simply cannot support, and everyone knows that. Loose credit, however, can indeed make the magic go for a very long time. Do we have a bubble? Yes. Do we have an AI bubble? Yes. Do we have a crypto bubble? I hope I don't get too much heat for this, but yes. By the way, if you're still watching, please leave a comment below. Let me know your thoughts. Let me know your experience. Let me know what you expect to have happen. Do you expect inflation to go up? Do you expect inflation to go down? And what do you think will happen when the Fed cuts rates? I read all the comments. I eventually do reply to all of them. I thank you in advance. And, the other part of it is, so basically cutting rates, people think will affect the 30-year mortgage, but it's not necessarily going to. It can only control its overnight lend-in to rates to members. It cannot determine how that will affect the full shape of the yield curve, which is what I said before. And it does not affect interest in credit card debt, which is already floating between 20 to 23%, the highest in history. There's also massive credit card defaults. All else equal, higher rates should discourage borrowing and encourage savings, right? So if interest rates were truly high enough, people would be saving money and earning money on their money, but they're not. And household income has been squeezed. Credit card debt has risen dramatically, and delinquent payments are starting to rise. Also, I'm going to probably do another video on auto loan defaults and auto loan repossessions. I think they're up like 30% year over year. A couple months ago, I did another video on auto loan repossessions and delinquencies. I plan on doing another one. And the personal savings rate has fallen instead of risen. So this is not, pretty. And how do we account for this? If everything is good, we have great Bidenomics, right? Jobs are at all-time highs, unemployment's at all-time lows, job open, whatever they want to tell us. But you and I, or you and me, who live in the real world, in the real economy, know that everything is not roses. So responding to interest rate signals requires discretionary income, which people simply do not have following the high levels of spending during lockdowns and the subsequent inflationary ravaging of whatever was remaining. So basically, they gave out a bunch of money. People thought they were absolutely rich. They spent a bunch of money, and that drove up the price of everything. And then people didn't have any money left. That's America for you. God bless America. It was one of economics history's greatest head fakes, during which time people thought they were rich, only to find out they were suddenly poor again. And to go on, over 5 years, the consumer price index registers 23 cents in lost purchasing power of the dollar in terms of U.S. goods and services. So again, I know I've risen my rates personally for my services, for my accounting services, my payroll services, my everything. We've had to increase it, and it's just gone up. And it's not just me; it's what other accountants do, and it's just the going rate. And what I used to do for when I first started out, if somebody came to me with a W-2, I charge $100, $125, $150. Nowhere near that anymore. We just have minimums, and thankfully we've grown so we can handle that. And yes, do we make exceptions to the rule? Yes. If somebody comes in and they're giving us their kids W-2, okay, then we'll usually do it on the house or for cost. But Rockwool, which is insulation, which I bought before the pandemic, was $30 a bag. It's now $80 a bag. That's up, close to 300%. Fast food, and I did a video on McDonald's and a few other ones In 2019, a McDonald's cheeseburger was $1. Now it's $3.15. A Big Mac was $4. It's now $7.50. I used to go to Chipotle. It used to be like $10, $12, and now it's like $20. And I just don't go there anymore. I can't justify a burrito and a soda with guacamole and queso for $20. It's egregious. Chick-fil-A in 2019, their signature sandwich was $3.65. It's now $6.55. Overall, prices at this restaurant are up 80%. Burger King prices up 85%. Taco Bell, they're up 57%. And In-N-Out Burgers are up 55%. And that's just food, right? Then you have the health insurance. And just insurance in general, they've been making cancellations left and right. I mean, the list goes on and on. But according to the BLS, premiums have fallen by 19% since 2021. I pay for health insurance for myself, for my employees. I know it's gone up substantially. 2 years ago, it was like per employee, I think $600. It's now $850. That's more than a 33% increase. And in the real world, inflation health premiums reversed up by 20%, according to KFF. So that's actually saying not only did it not go down 20%, it's actually up 20%, plus 20%, it's up 40%, but I think it's worse. In the beginning of the year of 2024, Geico tried to raise my rates by 40%. I shopped it around. They wanted to raise it from, I don't even know, I think $200 to $250 or something just absolutely egregious. And when I first started out with them 2 years ago, it was only like $125 or $150 a month. And I just said enough. And I shopped it around, and luckily I got it down. But, insurance companies have been driving up their prices through the roof. And so they want to tell us inflation is down. And who wants to? The government and businesses, right? Businesses don't want you to feel like they're ripping you off, and the government doesn't want to get blamed for inflation. But the government is at fault for inflation. They print, they overspend. As a matter of fact, the U.S. spent a record $140 billion on debt in June, 30% of all tax revenues. That's crazy. You pull in $100, $30 has to go to interest. What happens if you lower interest rates? Then we're going to spend a lot less on interest. Unfortunately, the price of everything else is going to go up. Anyway, explosive government spending since the pandemic response began. Gross domestic product exceeds the Second World War. And, what's the real problem that we face today? Stagflation, right? Which is basically going to be stagnation of everything with ongoing inflation that's going to be kicked into a higher gear. I think I've been babbling for a good 20 minutes. If you've watched this far, please let me know in the comments. It means the world to me. What are your thoughts? What do you expect to have happen? Me personally, I'm exposed. I think 50% of my portfolio is gold and silver stocks. I own a bunch of silver. I own a fair amount of gold. I've been investing in other hard assets, and I've been investing in high growth stocks. And I've been investing my money in international stocks as well. So let me know what you've been doing to help prevent inflation from destroying you, and hopefully how to profit. And if you'd like me to do a video on anything in particular, leave a comment below. All right. Have a great rest of the day. Thanks.